and welcome to Phoenix Talent Talks in partnership with the Business Post. Kicking off with our first podcast of 2021, we're taking stock. We're looking at the economy, overall employment trends and everything in between. I'm your host, Elaine O'Regan, and I'm joined here today by economist Jim Power, Mary Buckley, Executive Director at the IDA, and Ed Rossiter and Ruth Lyndon, founding partners at Phoenix. Firstly, thank you all for taking part. Ed, coming out of such a disruptive year, what is the lay of the land in the employment market now? Where have you seen the big changes? What trends are emerging and what can we expect in the months ahead?
Thanks, Elaine. It's great to be back again for another episode. So there's plenty of trends and statistics, I guess, to discuss coming out of what was obviously an incredibly disruptive year for Ireland. As we know, the employment market and general economic landscape have always been closely linked. So it'll come as no shock when I say that the employment market was severely impacted last year at points. Recent research from the likes of irishjobs.ie shows us that overall job postings on their website was down almost 25% year on year. However, we are taking a lot of confidence in the growth of employment activity towards the end of 2020, and that certainly continued into the early stages of 2021. Following the initial shock that every business experienced, I suppose, in March or April last year, we really saw a two-speed employment market similar to what I'm sure Jim will discuss on the economic side. And the more severely impacted sectors such as hospitality, retail and travel are really yet to recover to any great degree. And unfortunately, we expect this to be the case for quite some time. We now have over, 335,000 people on PUP, with a lot of these individuals coming from those sectors. On the positive side, I guess we saw a number of sectors that were more resilient and weren't as impacted as the likes of hospitality, retail and travel. These sectors would be the likes of professional services, financial services and even technology businesses, for example, who some actually experienced quite some decent growth last year. And really the shift to remote working didn't have a long-lasting impact on their day-to-day duties. Due to the pandemic, we saw a big increase in demand for pharma, healthcare and technology skills, obviously with an increased focus around vaccine R&D, increased demand for healthcare staff, and obviously an online spike in e-commerce, for example. I guess one really interesting trend, which will be with us for a long time, is the number of jobs that are now offering working from home as a location. And again, Irish Jobs stating that they saw an increase of almost 1,800% compared to this time last year, which is incredible. In terms of what we expect for 2021, so we've just released our salary guide and market insights report, and we expect salaries to remain quite similar to 2020 levels. And in line with the economy opening up again, we'd expect to see a large increase in opportunities within the hospitality and retail sectors, probably towards the back end of 2021. On another note, I guess the level of government support for businesses has been fantastic, with the likes of Enterprise Ireland and the SPCI offering favourable funding to businesses. At Phoenix, we work a lot within the private equity sector and private capital markets. And globally, I guess there is a huge amount of capital looking to be deployed and invested in growing or stable businesses, with almost 3 trillion in capital now globally committed to businesses. So that alone, I guess, will certainly be one to watch for 2021. If you look at even what private equity does, it's to invest in guaranteed growth for businesses in high growth areas, or even struggling businesses in need of an injection of capital due to the pandemic. So this certainly will have a trickle-down effect in the employment markets from what we've seen. So certainly an area to watch coming into 2021.
Mary, I'd like to bring you in here because I think a lot of the growth areas Ed has talked about there in terms of jobs are relevant to inward investment. And the IDA recently announced its results for 2020. Can you talk us through those results?
Certainly. Yeah, last month IDA announced its results for 2020. And really, when you consider the environment that we're all operating under, our base of 1,600 client companies really demonstrated remarkable resilience, agility, and strength throughout 2020. So we now have over 1,600 companies employing over 257,000 people in Ireland. This is an increase of just over 3.5% year on year. And as I said, it's a really strong performance despite the impact of COVID-19. And there were over 20,000 new jobs created in the year. We're always asked about investments. So in 2020, we won 246 investments. And that was actually just only 4 less than the previous year, 2019, which is significant. And about 95 of those investments were from our first-time companies. These are companies that have never had a presence in Ireland before. And of the 246, I think it's really important to note that half of those investments chose to locate in regional locations around the country. So, you're asking about, where to go. Some companies like, for example, CSC announced 75 jobs in Gorey and Wexford. Trilateral Research announced 40 high-quality jobs in Waterford. Pfizer announced 300 jobs and an investment of €300 million in Kildare, Cork and Dublin. And indeed, Regeneron in Limerick announced an additional 400 jobs in September, with another company, Axiom, announcing that they will establish 100 jobs there also. A really strong performance by our client base in 2020. I should add that we did have job losses also throughout 2020. And of course, they were higher than previous years at approximately 4.5% on last year. And that then brought our net employment creation in 2020 to almost 9,000 jobs. Where did the business come from? Interesting in our results, we had last year a very strong focus on staying very close to our existing client companies here. And I think our results demonstrated that. We saw in 2020 a higher level of investment from US companies, and that level was at 67%, higher than previous years. But as I said, we worked very closely with our existing base of companies here in Ireland, and we could see a lot of investment in the whole areas of R&D and of training, and that, I think, was part of that increased 67% of investments coming from the US.
Thanks, Mary. I think what you're talking about there kind of goes against the wider perception out there among a lot of people that 2020 was just a complete disaster from an economic perspective. I think people think, how could it not be given everything that happened? Jim, from your perspective, though, how did the Irish economy really fare last year? Was it all bad?
No, Elaine, it wasn't all bad. It was definitely very much an economy of two halves, or a dual economy. Clearly, those sectors like hospitality, tourism-related businesses, the airline industry, personal services had an absolutely dreadful year because they've been either shut down or virtually shut down the whole period since the middle of March. So very, very difficult trading conditions there. But then if you look at the other parts of the economy, the IDA obviously had another stellar year in a very, very difficult global environment, creating almost 9,000 new jobs. So the FDI part of the economy and the export part of that, very, very strong. Chemical and pharmaceutical exports up by almost 14% and accounted for about 66% of our total merchandise exports. You look at financial services, a reasonable year. You look at professional services, a reasonable year. And of course, in the public sector, employment was maintained. And in fact, a pay increase was delivered in October, with more to come over the next 12 months. So statistically, Elaine, we know that in the first 9 months of last year, GDP, gross domestic product, which is the international metric for measuring economic activity, expanded by 3%. That would make Ireland, I think, one of two global economies, along with China, that recorded positive GDP growth. However, in analysing the Irish economy, it's always important to understand the limitations of GDP as a measure of economic activity, because particularly since 2015, intellectual property assets brought in by a small number of multinationals, aircraft leasing, they tend to have a significant distortionary impact on GDP as a measure of activity. So the CSO here over the last few years has been trying to develop a modified measure of economic activity, which gives us a picture really of what's happening in the real economy when you strip out those distortions created by intellectual property assets and aircraft leasing. And while GDP expanded by 3%, this modified measure of demand contracted by 6.5%, which would pretty much put us in line with most other international economic experience. So in a nutshell, it was very much an economy of two different parts. One part very little affected by COVID-19 and the restrictions. The other part very, very significant restrictions there and, serious impact on the labour market. I think one of the more interesting aspects of what happened last year was the fact that the overall tax take, and I would regard tax revenues as one of the best metrics for what's happening on the ground in an economy, because every time we move in an economic sense, we pay tax for the benefit of doing so, for the privilege of doing so. And the more we move, the more taxes we pay. So it's a good, very good barometer of what's happening in the economy. Last year, the overall tax take was down by just 3.6%, which, given the circumstances that prevailed, an incredibly strong performance. And within that, the income tax take was down by just 1%. And given that we had a peak of 598,000 people in receipt of the pandemic unemployment payment last May, that sort of income tax take is quite spectacular. But what it tells us is that lower income workers who pay a much smaller proportion of our total income tax, they largely unaffected the tax take, whereas those workers who earn most and who pay most income tax in the sectors that I outlined, they continue to do well. And as a consequence, income tax take held up very well. So it tells us something about the structure of our labour market and about the progressivity of our tax system. And the other very significant point was that the corporate tax take up by 8.7% to reach 11.8 billion, which is a record high. And a lot of that is driven by those companies that the IDA supports in the economy. And finally, I would say that the income tax take in 2020 was the second highest level of income tax we've ever collected in this country, 2019 being the highest. So lots to complain about in 2020, but also lots to be positive about. There's no doubt about that.
Okay, so an economy of two halves in 2020. We're a few weeks now into a new year and we're back in lockdown for a lot of people. I think it's quite difficult at the moment to get any real sense of how the next few months might pan out. Based on what you said there, though, Jim, I think there are possibly grounds to be optimistic. Have we done enough at this stage to set the stage for recovery in the shorter term?
Well, recovery will be driven by epidemiological fundamentals rather than economic fundamentals. And it's the delivery of the vaccine successfully as quickly as possible. That's what's going to pull the trigger to get economic activity back firing on all cylinders again. There are certainly grounds for optimism, in my view, notwithstanding, the reservations and the doubts and the question mark over the rollout of the vaccine program. But if you look, for example, last year, household deposits increased by over almost 14 billion to reach almost 124 billion, which is the highest level of household savings we've ever had in this country. And the reason why that happened is because a lot of people continue to earn. They had limited ability to spend, or perhaps they were worried, so they engaged in precautionary saving. Whatever the cause, there is now a significant arsenal of personal savings out there waiting to be unleashed back into the economy once people feel safe and secure to do so. Second area of optimism is in relation to the corporate sector. Non-financial corporates also built up significant levels of deposits last year, about 72 billion at the end of November, which is a record high as well. So likewise, a lot of companies have put investment on hold because of the uncertainty around COVID. But if we got some clarity about the vaccine and the virus over the coming months, you will, I believe, see a lot of that investment, that pent-up demand being unleashed back into the economy. So I think there is a very strong basis for economic recovery. And clearly, you could say exactly the same thing about the global economy. There's a lot of pent-up demand waiting to come back into the system. And of course, really importantly, global and domestic policymakers continue to provide a lot of stimulus to the economy. We have zero interest rates virtually everywhere. We have central banks engaging in quantitative easing, which is keeping the cost of government borrowing down. We have the Irish government engaging and continuing to engage in very significant fiscal expansion to help those households and those sectors most adversely affected by COVID-19. So there's a lot of firepower being thrown into the economy as well by policymakers. So a combination of all of those factors, in my view, does set the scene for a decent recovery in the economy. I would stress again, though, that epidemiological factors will be the key determinant for the near term. So we just have to watch, number one, the path of the virus, and number two, the rollout of the vaccine program. I think if the vaccine program is rolled out successfully, you will set the basis for a decent economic recovery. And I do believe that the recovery from COVID certainly has the potential to be significantly stronger than the recovery we saw back in 2011 coming out of the global recession at that stage.
So Mary, just coming back to you and bearing in mind what Jim has said there about the vaccine rollout, but also about this potential pent-up demand on the consumer side, and also this, I suppose, readiness to invest on the corporate side. What are your expectations for inward investment and FDI over the next few months based on the inquiries you're handling at the moment? What can we expect, particularly in terms of job creation?
Sure. Thank you. And, from that perspective, I think COVID will obviously continue to be a major challenge with very much high levels of uncertainty generally around the globe, around the economic outlook and how it'll impact foreign direct investment in particular. And from our perspective in IDA, we've been looking at international organizations like UNCTAD, which is the UN body responsible for trade and investment. And they say that they do expect the FDI declines of between 30 to 40% over the period 20 to 21. So for us, from the FDI perspective, we do believe that there is an uncertain outlook there. And if I could just build on that challenging environment, when it does come to winning FDI and retaining the base of companies that we have, we operate in an extremely competitive international environment. And as other countries are like us, just trying to repair their pandemic damaged economies post-COVID, it's likely that competition will become even more intense, particularly because, we're likely to see reduced levels of FDI as well. But, to balance that, I do think, our performance in over the last number of years has been really strong. And Ireland does have an excellent value proposition to offer investors, which has stood us in good stead over the years. And, we will work and continue to work to retain that very strong value proposition. But I think one of the key points that we do have to emphasize when I talk about the environment and the competition is that we really just can't take FDI for granted. Our competitiveness is key too. And Ireland really needs to continue to enhance our value proposition, not only to attract and retain FDI, but also having an ongoing focus on our cost competitiveness and in our investment in productive assets. So, I think that's going to be hugely important. And they're going to be key determinants to our ability to win further foreign direct investment over the near term. Maybe just to add as well that we actually haven't had physical site visits since last March either. And we're not likely to have them again for a long time due to the travel restrictions, etc. And our, obviously, IDA team last March moved very quickly to have a very strong virtual or an e-site visit offering during the first lockdown last year. And that continues and it's working successfully this year. I'd have to say it's no substitute for face-to-face meetings. And it is how relationships and trust are built. And as my CEO, Martin Shanahan, regularly describes FDI, it's a contact sport. But notwithstanding that, we have got off to a good start this year. We've had a number of good announcements from right across the globe. We had yesterday Microsoft announcing 200 additional roles in international inside sales. We've also seen Huawei with 100 jobs being announced around the country. And Personio, which is a German company, announced as well additional 140 jobs in Dublin. So there's been a good level of activity in the last number of weeks.
Okay, so a strong start to the year, but understandably an uncertain outlook for the months ahead. If we look further down the line, though, the IDA has just published its strategy for the next 4 years. What are your key goals and priorities in that? And has the pandemic had much of an influence on these plans?
Yes, well, the Taoiseach and Martin Shanahan, our CEO, launched the new 4-year IDA strategy, driving recovery and sustainable growth, in January. And, it's set against, obviously the backdrop of our previous strategy, Winning FDI, where at the end of 2019, we saw the highest levels of employment ever in our FDI base of companies here. So we went into 2020, in a strong position, bearing in mind the COVID crisis that was ahead of us. And we have very high value sectors and very strong base of employment. And at the end of 2019, we went in with 245,000 jobs. And as I just mentioned, at the end of 2020, we're up at over 257,000. So I think that's going to be hugely helpful to us in driving the recovery. And our new strategy, I think, is very ambitious. As I've already, mentioned, we recognize the importance of FDI to a resilient and a sustainable economic recovery. And I think that our strategy very much reflects the sustainability of jobs and companies across the country, and the work that we need to do and will continue to do to support our clients, to innovate and to transform, not just really to remain viable, but to develop and grow, to work to increase the productivity of their operations that I mentioned earlier, but also their workforce through really important activities like research and development, digitization, the training and upskilling of their employees, and implementing actions on environmental sustainability. And, I think it's really important to say that this transformation has never been more important than it is today. And it's why we've made sustainability, innovation and transformation very much an integral part of our new strategy through 5 key pillars of focus, which are growth, transformation, region, sustainability and impact. Our sustainability pillar is a new area of focus in that we will be promoting a very much a sustainable approach to investments in order to help to drive a green economy, collaborating across government, and we'll also be aligning with the UN Sustainability Development Goals. Indeed, we also have to look within our own organisation to increase our own sustainability activities as well. But I did mention there that we have an ambitious strategy, and I think at a head level, our targets in the strategy are ambitious, with 800 investments and 50,000 new jobs over the next 4 years. And that's not going to be easy to achieve. And in fact, there's no guarantee that we'll do so. We have a very much an ongoing deep focus on regional development. And that continues with us having a target of 400 investments, or 50% of the overall investment target, to locate in regional locations across the country. Our strategy's success is obviously based on achieving all of these targets. And it does depend on a number of factors, like the economic environment, the growth potential of our clients, our competitiveness, as I mentioned earlier, and indeed, the ongoing collaboration with key stakeholders across government, nationally and regionally, to name a few. But, I think it's important to also say that while the whole transformation is hugely important, we also have to maintain a really strong focus on attracting the next generation of leading multinational companies to Ireland as well. And that will ultimately help us sustain growth and maximise the impact of foreign direct investment in Ireland, up to 24 and indeed beyond all of that as well. But I think, we do require a realistic and flexible approach, but one that is really ambitious in our strategy to contributing significantly to Ireland's recovery, which is critically important for us.
So, Mary, I think especially on that next generation front and companies that are looking to work in new and more progressive ways, we have to talk about remote working. From your point of view at the IDA and from the FDI perspective, is remote working a good or a bad thing?
Well, I have to say that during the pandemic last year, 52% of our client companies were working from home. And I think that was significantly higher than the national figure, which I think was about 28%. And working from home has proved successful for many of our clients. And indeed, as time goes by, we're seeing that some of our clients are interested in accelerating working from home roles. And we've seen some of that this year in announcements by companies where they're looking for employment in regional locations, and they will be remote working roles as well within that. And so I think that's important. And the feedback has been positive. But I think we've also recognized that while many of our companies will focus on remote working within Ireland, some other companies have been able to highlight to us that they do feel that the blended model of both having the ability to work remotely and also to have team members in the office is important. And they see it important for a number of reasons: for creativity, for innovation, for networking, for team training, and for the overall importance that collaboration has and team working has in any working environment. So I think from the perspective of our clients and the creation and increasing employment here in Ireland, yes, remote working is going to increase, but I would be very conscious of the importance for them of being able to operate that blended model of a mix of remote working and operating within the office environment as well. So that, I think, is where many of our clients will be.
So Ed, from your point of view at Phoenix, you're working with international companies and Irish companies, helping them to fill new high-level roles. And what are they telling you about how they view remote working? We've had 9 months now to get used to the pros and cons. What are the positives and the negatives you're hearing about on the ground?
Sure. So I think in general, the majority of our clients moved to remote working almost 12 months ago, early March or mid-March and early April of last year. So many of our clients have remained this way since. In a lot of ways, I guess businesses, including ourselves, are incredibly grateful for the technology and infrastructure that we have now to make this a possibility. I guess even if you look back 10 to 15 years ago, broadband infrastructure wouldn't have been as advanced. Technology, video conferencing wouldn't have been as advanced. So we are incredibly lucky to be able to do what we're doing currently. But I guess if you look at what our clients are saying to us around certain challenges and concerns, for the most part, I guess remote working has enabled businesses to continue in a somewhat normal capacity. But as we move closer, as I said, to the 12-month mark of working remotely, we're hearing more concerns across a number of different areas. And I guess a couple of those would be, for example, even learning and development, which would be probably looking at more junior employees for some of our clients. If you take professional services firms, for example, across the accounting and legal firms, so much of your early years in learning and development in these environments is almost learning by osmosis from being around senior directors and partners of these firms and seeing how they present the business to clients in pitches, even reading their body language in certain scenarios, which almost has been removed in its entirety. So another key challenge, I guess, around remote working has been actually onboarding of new staff. And we've experienced that ourselves here in Phoenix, having onboarded and hired a number of new employees over the past 9 or 12 months. Just the logistics, even getting laptops and phones and making sure their workspace is a safe and suitable environment has made things just more difficult, really. And from a company culture perspective, as Mary has said, embedding these new employees into, the company values or culture and even the individual teams that they're a part of, has been far tougher than normal, of course. But in general, I guess, as Mary was saying, the creativity and problem-solving aspect is also something that clients have highlighted to us. So even though remote working has been a godsend for most businesses, including our own, as I've mentioned, as time kind of wears on and we get closer to the 12-month mark of working remotely, businesses are becoming more eager to get back to some sort of a blend of office life and remote working, even though we don't expect full-time office attendance to ever really be a thing again. But without doubt, remote working will open up a whole new world of possibilities for both companies and employees alike to have a more agile and flexible workplace and workforce going forward.
Ruth, I'm going to bring you in there because I think in that context, we do have to talk about the new national remote working strategy that the government has introduced. Again, from your experience working alongside Ed at Phoenix with companies and candidates, how are they responding to that strategy? Is it welcome or are there any concerns?
Thanks, Elaine. Overall, the response to the National Remote Working Strategy has been very positive. As all of the speakers to date have alluded to, the way we worked changed dramatically and swiftly March last year. It has never been the same, nor will ever be the same again. So overall, the fact that the government has publicly acknowledged this and has formulated and devised a plan and communicated that is viewed as a positive thing. The strategy document itself, it's 30 odd pages, very user-friendly, I thought. It sets out very clearly, that the key objective is to ensure that remote working is there throughout Ireland. It has some key action points that it wants to address, things you would expect, like it's going to review the treatment of remote working for the purposes of tax and the forthcoming budget. It's going to map and invest in a network of remote working hubs across Ireland. Also going to look at things like high-speed broadband, make sure that that's being invested in across the nation. But I think what's really good is that each action point, whilst this is very much an interdepartmental initiative, there are specific departments that have been assigned responsibility to lead certain elements of this. And even more to the point, it was great to see that there actually are prescribed timelines throughout the 4 quarters of this year by which these actions have to be taken. So the document, goes through the benefits of remote working, a lot of which we have discussed already. Some of the key things that you would expect to see, things like better work-life balance with less time spent commuting, more time for family and leisure. Also looking at and mitigating the costs of early learning childcare. The net cost of early learning and childcare is 28% the average wage of a couple here in Ireland, whereas the EU average is notably lower at 12%. So that's definitely something that maybe gets forgotten, but is a big plus of remote working. From the sustainability, environmental piece, obviously seeing reduced greenhouse gas emissions. And then for employees, it's giving different categories of workers, such as maybe those with disabilities or those with care obligations, they can now access more opportunities. But equally on the flip side, it's giving employers access to wider talent pools. So a lot of, the benefits of this per the strategy is very much what we would hear talking to clients and candidates. In terms of the potential risks, and the strategy does acknowledge that there are risks here, which is good. Again, a lot of them would reflect what we're hearing on the ground. And Ed and Mary have mentioned and alluded to some of these. The Taoiseach in the strategy document talks about an innovation deficit. And I definitely think this is something that we're hearing from clients. There's concern that if there isn't this natural opportunity to do organic troubleshooting or brainstorming, is there going to be a decrease in the amount of innovation and collaboration? And then the question is raised, will this in turn negatively impact productivity? Also, Ed mentioned, and very relevant, particularly in professional services, is the training and development. Can you give as good a training and development opportunity to, say, example, trainee solicitors or trainee accountants if they're not in the office? I don't think it's impossible, but I definitely think it's going to require a lot more thought and time and sort of clever troubleshooting amongst clients. One or two of the things that maybe as well also comes up as concerns around this when we talk to candidates and clients, from the candidate perspective, there is this whole piece of, is this going to go against me when it comes to promotions if I am the person that avails of this and I'm not in the office? So that's something that I think certainly employers will need to be very mindful of and make sure that when they promote agile working, it's promoted equally across everybody in the company and all genders also. But two things I just wanted to touch on, which were raised in the strategy and I think probably have, got most of the headlines since it's been released. The first one is the right to request remote working. So this has raised a lot of discussion. To be honest, we're going to have to wait until the legislation is enacted later this year to really see the detail, because the devil will be in the detail. But just, to clarify, employees can right now and always have been legally entitled to ask their employer to work remotely. This isn't a new concept. And, the Parental Leave Act, for example, it has similar provisions whereby employers have to consult with employees and provide business-related reasons if they're not going to grant the employee's application for the dates requested. Also, interestingly, and this is mentioned in the strategy doc, and I'll be honest, I wasn't aware of it, but there is a work-life balance directive that actually came into effect in August 2019. Now, all member states have 3 years to implement it, but time is ticking. And this is introducing a new set of legislative actions aimed at better supporting work-life balance for carers and parents up to the age of 8. So this is going to include a broader concept of flexible working. So that will go, that's broader than remote. That can include things like flexi time. But ultimately, the concept is not new. The right to request it has always been there and remains there today. what this legislation will do, as described in the strategy, is that it's going to a legal framework around which employees can request remote working. So it's going to give clarity to employers on best practice in dealing with these kind of requests. And it's going to require an employer to, one, balance its own business interests with those of the employee when dealing with such requests. And two, it's going to have to provide objective business reasons if refusing a request. Now, this is the piece that gets everybody most excited. This is probably the first thing people are going to look for when the legislation is enacted later this year. How much guidance does this give? Every business is different, and the strategy absolutely acknowledges that. And it also acknowledges that for some roles like teachers, Gardaí, health workers, people with a lot of manual elements to their roles, sometimes you just cannot work remotely, and every business is different. But I think this is one that everybody's very interested to see how prescriptive the legislation goes. And I think, also another element that this raises then, if you don't have an objective reason as an employer and therefore your employee is going to work from home, you have a health and safety legal obligation towards them as an employee. So the HSA makes it very clear that the legal obligations in terms of an employee's health and safety rests with the employer. So if, more people now are going to be working from home, it raises questions in that regard. Ultimately, our health and safety legislation is governed by EU law. The two primary EU directives are currently under review by the EU, and the HSA is participating in this and representing Ireland. So the way we worked has changed. It's having knock-on impacts on our legislative framework. And, it is a good thing, though, and it's being viewed as a good thing that the government is addressing this head on. And it's very much, one to watch till later this year. The second and final point in the strategy I'd mention is the right to disconnect. So obviously, as Ed mentioned, we've such developments in technology, and with that and with this increased move to agile working, employees are now accessible in a way they never were before. And for many employees, and I feel it myself, even as an employer, but it can be harder to distinguish between work and the office, and the lines are becoming more blurred. So what this right to disconnect, what this means and what the government is envisaging is a right for employees to disengage with work and refrain from engaging in work-related electronic communications like emails or other messages during non-work hours and holidays. At the moment, there is legislation there governing, breaks, and it's on the employer to ensure that they're given sufficient time away from the workplace for rest. But this one, there was a public consultation on this, and there was a common theme that, yes, employees shouldn't feel obliged to work longer hours than at home than they would if they were on site. But where the submissions differed was whether new specific legislation on the right to disconnect was required, because it's a very delicate balancing act. There was concerns that over-regulation of remote working would undermine its flexibility. And this is one of the fundamental benefits of remote working. So the government's aware that it needs to find the right balance. So it's looking at a code around the right to disconnect. But ultimately, what it wants to do and what it's encouraging is that employers to come up and devise their own policy, their own charter on this with their employees. Again, it does recognize that every business is different, but it's encouraging, that this is a conversation that you should have with your employees and you should put a charter in place. We won't be the first to do it. France has, in 2017, companies there with more than 50 employees have to develop a charter which defines the employee's rights to switch off, and it sets the hours when staff are not supposed to send or answer emails. And then Italy, Spain, and Belgium, they've also implemented legislation. But, for me, even personally, and even indeed from talking to clients, it just might be, a lot of the time, being honest, when I maybe get to go through some of my emails, it might be in the evening. And I'm very interested to see, what this right looks like, because does it mean now that, I shouldn't be sending emails, even if it suits me better to send emails and I don't expect any response back from my employees, but maybe I just have to stop doing that. And I think that's something myself and Ed will have to talk to our guys and discuss, put and agree parameters around this. So I think strategy overall being positively received. I think the right to request remote working and the legislation on that front, and the right to disconnect and the code that's coming on that front, they are the two pieces that people are talking about the most.
Thanks, Ruth. Some really good points there on the practicalities of actually managing remote working on an ongoing basis. If we look at it on a broader level, I think we've heard a lot about how remote working could fuel regional economies in Ireland. From your point of view, though, is that actually a given, and what do we need to be aware of here?
There's no doubt, Elaine, that the National Remote Working Strategy and the focus on agile working will reap benefits for the regions. The strategy specifically talks about, investment in infrastructure and broadband, something that maybe the regions didn't get as much of compared to the likes of Dublin. It also talks about, a natural positive of agile working is the rejuvenation of rural areas. This is going to fuel local businesses and the local economy. The regions, of course, continues to attract people out of the likes of Dublin. It may be that they're from there originally, want to get back home. There is potentially arguably better work-life balance, more cost-effective childcare, etc. And the regions has clearly been very successful in attracting top talent, and it has created hubs, if you like, in certain sectors like funds in the Midwest and Southwest, life sciences in the West and the Southwest, and then the tech and cybersecurity across the country, but also in the Southwest. So that's not going to change. One thing I think that is just worth maybe noting is that there is the possibility that because, say, Dublin-based organisations will offer their employees agile working, be it, for example, 2 days in the office, there is the risk that in order for somebody to be enticed away from that remote working Dublin role and that Dublin salary, that they will need to potentially be paid a salary that's getting higher towards their Dublin salary to make that move to the regions. So we may see, there is the possibility that the salary gap between regional salaries and Dublin salaries narrows, with the regions having to come up slightly higher to attract and retain that talent. I don't have a crystal ball. Time will tell. It's definitely one to watch. But I think overall, the regions continues to be an ongoing success story. Mary mentioned that, the FDI, 50% of their targeted investments over the next 3 years is focused on the region. So it continues to be a really good news story. I think overall, agile working will only be a positive. But the one piece to watch that we will watch with interest is just around regional versus Dublin salaries.
Thanks, Ruth. So we have covered an enormous amount of ground in today's podcast. James, I'm going to come back to you to finish up. Based on everything we've talked about, what are your big picture predictions for 2021?
Well, the big picture predictions are, number one, global policymakers will continue to provide as much stimulus to the global economy as necessary. I think that's a given in terms of interest rates and fiscal policy. It's totally appropriate. And of course, that benefits us here in Ireland, and the Irish government will continue to pursue a very aggressive fiscal policy stance, which I think is totally appropriate. I think the second big theme really is how quickly the people respond to the delivery of vaccine program, how quickly people get out and about again, and particularly how quickly international travel comes back on track. And there is a sort of a consensus view at this stage that it's probably a story for the final quarter of the year rather than during the summer. So I think international travel will remain very, very constrained for the foreseeable future. I think from a domestic perspective, it is how quickly people get back into the habit of going out and spending again. And in other words, how quickly that pent-up demand in the economic system will be unleashed and generating strong economic recovery. I think in terms of the labour market, at the beginning of 2020, I would have written about one of the big challenges for the economy and employers was the retention and recruitment of talent in an environment of an economy approaching full employment. Obviously, after March, the whole thing changed with COVID. But I think that even today, as we sit here, this recruitment and retention issue remains a very significant one for employers and will be a big challenge over the next couple of years. But there's going to be another segment of the labour market, people in hospitality, in tourism, airlines, etc. I think the recovery in the labour market there is going to be significantly slower. But for employers in areas of the economy that are still doing well, I think the importance of human capital and attracting and recruiting and retaining talented workforce is very, very important. I would like to see at the end of all of this, government refocusing on investment in education. And I think Simon Harris probably has one of the most important ministries in the country at the moment, because what will differentiate Ireland over the coming years will be the quality of its workforce, provided we invest in that appropriately. And in the area of foreign direct investment, one of the big challenges coming down the track is the ongoing global effort to try and reform the corporate tax code. President Biden in the United States will play a key role in that process. So we really do need to make sure that the other things we offer apart from the tax rate, that those things remain as positive as possible, and competitiveness broadly defined is included in all of that. And finally, two other big themes will be, number one, the global impact of Biden. Will he become much more multilateral in his approach? Will he reach out to try and rebuild those bridges that were broken between the United States and the European Union, for example? And what will his approach to China be? I would expect it to be pretty similar to what Trump was doing in terms of trying to bring China to book on some of the issues that are of concern. And finally, how the Irish economy and indeed how Brexit settles down will be a big issue. We've seen in the early weeks of the year a lot of trade dislocation and other uncertainties revolving around Brexit. I would see those things as teething problems rather than something fundamental, but it will be really interesting to see how Brexit settles down over the coming months, because undoubtedly it will make the trading relationship between Ireland and the UK more difficult and more complicated. So I would like to see Irish businesses trying to focus in on the opportunities presented by Brexit, particularly in the areas of import substitution. And for the SME sector, particularly in the agri-food side, I think there are significant opportunities provided we do the right things.
Elaine, just if I could come in there, just in reference to Jim's point on the talent side, and that there are in certain sectors which are still performing well, that the recruitment and retention remains an issue. And just to say, from a Phoenix perspective, we would absolutely agree. We are seeing, because of the likes of the Brexit withdrawal agreement, which has brought certainty to the financial services and particularly fund space, because of things like the recent enactment of the ILP legislation, which is going to make Ireland a much more attractive domicile for a certain type of private funds. And of course, then with the likes of the Workplace Relations Commission due to start increasing hearings and the courts, due to open, we are definitely starting to see areas of high demand, and they reflect what's going on economically. They include areas like funds, corporate lawyers, employment lawyers, private equity professionals, insolvency and restructuring professionals. So those areas of high demand are starting, and we are getting in some instances to cases already where the demand is outweighing the supply. But what we've also seen quite interestingly is, absolutely, talent brand is really going to play a part in both retaining your best staff and recruiting those people that you want. And what we have seen, we are having conversations with candidates now who maybe would not have spoken to us 6 months ago because they would have had no interest or desire to even consider what else was out there. But maybe because of how their employer has handled COVID, they now feel, do you know what? They weren't maybe as transparent about it as I would have liked. They maybe didn't communicate as well or as frequently with us. So some companies have, maybe lost some of that buy-in, whereas other companies are doing things really well, focusing on the mental health side of things. And for some companies, this is a real opportunity and they're maximizing it to work on their talent brand and to get that loyalty from candidates. So I think for savvy employers, this is a really good opportunity, and particularly now moving forward, when, like we talked about, the right to disconnect and talking to your employees about that. So just to mention, absolutely, we're starting to see pockets of high demand. We're starting to see demand equal, if not outweigh, supply. And I think for clever employers, how you interact and deal with your employees now can make a huge difference in both retaining and attracting strong talent.
Lovely, thank you. So that is it for today's podcast. Thank you to Jim, Mary, Ed and Ruth for your very valuable insights, and a big thank you as always to our listeners. We'll be back soon with the next instalment of Phoenix Talent Talks.